Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's lots to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. U.S. stocks moved slightly higher Tuesday as Wall Street absorbed President Trump's bid to remove Federal Reserve Governor Lisa Cook. At the end of the trading session, all major indices did end the day in the green. And America hitting the road for the Labor Day holiday weekend, and drivers may not be feeling a bigger pinch at the pump. We're taking a deep dive into the state of gas prices and what to expect. And drivers are also sharing the road with autonomous trucks. We're taking a look at the impact they've been having on supply chains, efficiency, and company bottom lines. Well, autonomous driving is emerging as one of the most promising frontiers in transportation, and analysts see driverless trucking as a multi-billion-dollar opportunity with the potential to unlock massive efficiencies across U.S. supply chains. Joining us now, we have Aurora CEO Chris Urmson. Chris, it is good to see you as always. Maybe you start there, Chris. I'm just curious. When you think about the market you're targeting here, Chris, that total addressable market, how big is that market, Chris, and how fast is it growing?
Great to see you again, Josh. Thanks for having me on. It's incredible, right? It's a $1 trillion market, trucking in the United States today, and we see the opportunity to help transform it. Our customers need help with their bottom line and their top line, and we can help them with that. More efficient transportation, cleaner transportation, quicker transportation, all stuff that helps the American, the backbone of the U.S. economy grow.
You do have competition as you chase that opportunity, Chris. I'm curious to hear, as you compare and contrast yourselves with those rivals, what would you say your competitive advantages are?
Well, I think the biggest thing is we actually have a product on the road while others are still trying to figure out how to get there. And that means we're learning more from our customers. We're kind of accelerating away. And so that's really the most fundamental part of it. And then behind that, the technology we have, whether it's our ability to see down the road or the way that our verifiable AI system works, we think that is the answer for this particular problem. The team we have, the partners we have, we're incredibly well positioned and excited to be on the road.
What about the role of regulators, Chris? I'm curious, what are the kind of regulatory challenges you think are still in place?
Well, at this point, across the vast majority of the United States, we can actually be out on the road today. We've got an incredible partnership with the state of Texas, and as we look to where we're going to be intend to expand over the course of this year, out to Phoenix from Fort Worth, we see no barriers there. The current administration has really made it clear that automation is an important technology that they want America to lead in, and so we love to see the support from the administration and from the regulators. So right now we feel really good. We see opportunities to incrementally improve it. A national framework would be useful, but it's not essential at this point.
I'm curious, Chris, you mentioned the Trump White House. Have you had direct contact with the administration? And if so, I'm curious, what are those conversations like?
So we, of course, talk with the Department of Transportation regularly. What we can tell you is that Secretary Duffy in his public remarks has talked about the importance of automated vehicles. Vice President Vance has talked particularly about the importance of automated trucking and what that's going to mean for the U.S. economy. So really excited to see that enthusiasm and look forward to the support.
What about the tariff threat, Chris? Front and center for a lot of companies, of course. I'm just curious, how does that play out for Aurora, and how are you navigating that?
Yeah, I think in the immediate term, it's not really a thing. We already have the hardware in the U.S. that we use for launch. Of course, as we begin to scale, our supply chain is international, and we've been looking at how do we diversify and how do we make sure that that's appropriate given whatever tariff environment we may live in. Honestly, if you have a hint for exactly where these tariffs are going, please let me know. We'd love to plan for it.
Chris, obviously we're all on focus now for NVIDIA's earnings tomorrow after the bell. I remember early this year, you all made a lot of headlines. You inked that long-term deal with Jensen Huang's company. Any update there on that deal, Chris?
No, we're excited to see the parts starting to come together. We're one of the pilot launch customers for Thor, which is this exciting SoC. And, it's going well. So excited about the progress.
If you fast forward 10 years, Chris, I'm curious, what would success to you look like for Aurora, and how would you define success?
Yeah, it's going to be incredibly exciting, right? We look at that opportunity to go out there and serve our trucking company customers and really move freight more quickly, help the American consumer by making the cost of moving goods lower. So we think that's going to be incredibly exciting. But when you take a step back and think about the core capability we're building to understand the world around us, the opportunity to take this business that's going to start and build strongly in trucking and then apply that technology to places like personal mobility, to things like construction, to last mile delivery, it's going to be incredibly exciting. And then from there, the opportunities are just nearly unlimited. So incredibly optimistic and excited for the future here.
And Chris, finally, I look at the stock. It is in the red so far this year. Analysts who cover the name, they're split right down the middle here, Chris, in terms of whether you all are a buy or a hold. Is there a part of your story, Chris, that you think maybe investors in the street don't fully appreciate here?
Yeah, I think in short that when you're inside the company, you can see the roadmaps that we have, you can see the technology and progress we're making, and it's hard for us to share all of that externally. As we start to knock down some of these things, as we begin to operate in the rain, as we begin to expand the route and demonstrate what we've been saying practically, I'm pretty convinced folks will understand the opportunity of the story better.
Chris, always great to have you on the show. Thanks for your time.
Thanks so much for having me.
Stick around. Much more Ask for a Trend still to come. Well, one of the busiest travel periods is around the corner now. Millions across the country gearing up to hit the roads this Labor Day weekend and facing friendlier prices at the pump. Average gas prices this Labor Day predicted to be the lowest since 2020 and potentially even lower in the weeks ahead. Here with a closer look, we got GasBuddy head of Petroleum Analysis, Patrick Haan. Patrick, great to see you as always. Did I see you, Patrick, fact check the president on gas prices? Was that you, that we're not in fact seeing any stations report below $2 a gallon? Was that you?
It may have been me. I get real excited at the prospect of $1.99 gas. So when I get so bitterly disappointed when I check all of GasBuddy's records and I don't see one, yeah, I may have mentioned to the president that it's not quite there yet, although it's the cheapest Labor Day, as you showed there, since 2020. There's been good news. It's also been the cheapest summer if you average Memorial Day through Labor Day. This is a trend that we've seen right over the years. Gas prices have progressively come down for Labor Day since hitting the peak in 2022. A lot of that simply the economy slowly rebalancing. Interest rates were elevated. That slowed down demand. In addition, OPEC this year increasing oil production, also helping to put more downward pressure on gas prices. But I'll throw in a caveat. Those in the Great Lakes got a little bit of a pinch in the last week. A major refinery outage in Northwest Indiana is causing a little bit of heartburn. If you're in areas like Michigan, Wisconsin, Illinois, Indiana, and Ohio, you're seeing gas prices that have just spiked ahead of Labor Day due to that refinery outage. But even on those places, you'll start to see a bit of relief.
Yeah, so you're predicting the average gas prices on the last summer holiday weekend of 2025, you say $3.15 per gallon. Now the question is, Patrick, where do you think we head from here? I mean, could we go sub 3, do you think?
Yeah, I think that's within the realm of possibility here, especially as we get into October, November, the colder months when Americans tend to stay a little closer to home. In addition, we're about 3 weeks away from making the transition back to cheaper winter gasoline. And with it, that there is about a 5 to 10 cent decrease in price. So, if you throw a little simple arithmetic in some of those numbers, that 5 or 10 cent drop when we make that changeover should get us real close to that sub $3 a gallon national average. I do think that's something we'll hit. Whether or not we're going to stay there, that's the question. But I think the fourth quarter of 2025 is going to be the cheapest quarter of this year. So talk about a good summer. It's going to be an even better fall.
What are some potential challenges, though, Patrick? Would it be, is it hurricane season? Is it tariff and trade uncertainty? What would be on your radar?
I think certainly the one you mentioned first, hurricane season, obviously with this severe weather in the Midwest causing this refinery outage that pushed prices up, just really highlights the uncertainty of Mother Nature. Almost 50% of the nation's total refining capacity is down in 2 states, Texas and Louisiana. Now, coincidentally, those are areas that are a little bit more prone to hurricanes. Now, maybe not so much as Florida, but if we see a major storm enter the Gulf, not only does it usually shut down oil production, but we've seen storms like especially Harvey and Irma back in 2017. It can inundate. Hurricanes can inundate refineries with potentially feet of flood water in addition to damage. So hurricane season's a big wild card. Trade and tariffs, maybe not so much, but certainly something to keep an eye on as well if there's a big deviation.
And Patrick, just to be clear, so your base case there, to put a fine point on it though, is your base case would be, yes, gas prices do seasonally cool off.
Yeah, exactly right. And that's why I think within the realm of reason, we're probably going to see a national average eventually fall below $3 a gallon. Hurricanes, tariffs, and trade, that could temporarily delay it depending on what the news looks like. But, we've got a probably better than 50-50 shot that the national average will eventually fall below that $3 a gallon mark later this fall. Hopefully, President Trump is as excited about tweeting that out as he is the possibility of sub $2 prices.
I'm always curious, Patrick, regional differences. What states, where are we seeing the highest prices, where are the lowest right now?
Yeah, a lot of it has to do with taxes, regulations. The West Coast almost always is the top dog. California is still paying an average of $4.55 a gallon. And if you go down to the Gulf, you have a combination of being next door to those refineries, low taxes, low regulations. Places like Mississippi, Oklahoma, Arkansas, Texas, all are the nation's cheapest, below $2.70 a gallon. So almost a $2 gallon spread between the cheapest states and the most expensive.
So Patrick, I'll get you out of here on this. As I pile into that car this weekend, I'm looking for deals. I want the best gas price. What do I do? Do I go to the GasBuddy app? Is that my best bet?
Oh, it's probably a good bet to fire up the GasBuddy app, but you aim that steering wheel for somewhere in the Gulf, and hopefully, if you're going to make advantage of those savings, hopefully you're not just in a car. Maybe you'll tow an extra tanker truck behind you to take that home with you.
Patrick, always great to have you on the show. Thank you.
My pleasure. Thanks.
Stick around. Much more Ask for a Trend still to come. Stocks closing the trading day higher with President Trump's Fed fight in focus and investors eyeing NVIDIA's earnings on deck. Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
Let's start with NVIDIA because it is almost right back to those record highs. And let's pull up a chart here. This is the entire semiconductors. Let's get the semiconductor sector up there on the Wi-Fi Interactive. Here we go. And you can see nice broad bullish action today in the semiconductors. Here's NVIDIA up another 1%. This is the intraday. And let's just get a 1 month so we can see. Here are the record highs that we had earlier, and we're right back up there. So 4.77%. People got a little freaked out. This was 17% from peak to valley there, if you include the highs and the lows of the days. 8% close to close. So it wasn't nothing, but we were right back up there. Now I want to show you, I've been talking about rotation a little bit, and we saw rotation back into the semiconductors today. This is a 1 month. I'm going to broaden this out to a 5 year so you can see. There we go. This is a record high that we had in semiconductors in 2024. So we are pretty close to that level right now. So broadly bullish action in semiconductors today, but also nearing those record highs. If NVIDIA really knocks it out of the park Wednesday after the bell, well, Thursday, maybe we'll be talking about SOX record highs.
You mentioned rotation, which has been a theme, I know. What else, what's of note there?
We had a couple, so some opportunities here. Rotational opportunity does knock. I was specifically looking at defense today, aerospace and defense, and a lot of this has to do with that big Boeing order that we've been talking about that came out of, I believe it was Korean Air. Here are the defense stocks, and you can see Boeing up 3.5%, really nice lift to the Dow, and just a lot of green here as well. You can also see this in aerospace, and yes, there are some overlaps, Boeing's in here as well. The red spot, that's a French ticker, so you're not going to see that. Reflecting U.S. prices, but also regional banks. And here we have regional banks in the U.S. And this has to do with the yield curve and a nice spread that's been opening up between the short end and the long end. And why is it opening up? Because people are anticipating those Fed rate cuts, and those act at the shorter end. So if the long end just stays the same and the short end goes down, you got that spread there. And net interest margin is the name of the game. And that's what regional banks like. Also had the chance to sit down with Stephanie Guild. She is the CIO and president of Robinhood for Stocks in Translation. That episode is out today. We talked about some of these opportunities. Let's take a listen.
Whereas the opportunities do exist on some of the, I think, less expensive areas of the market. So that might be regional banks, especially if like M&A and deregulation start to come out, and we do have a steeper curve, meaning that short-term rates come down a little bit, but long-term rates kind of stay around where they are. I think some of the cheaper tech names, like in the software space, they've been not as strong this year. Some continue to be a little weaker, but I think there are some diamonds in the rough there. And I mentioned, aerospace and defense already. Those are kind of some of the themes.
So aerospace and defense work today, so did regional bank software, maybe another day, but there are those diamonds in the rough, as she was saying. So that kind of wraps up the opportunities here.
Now, we've been talking about Bitcoin, which some do refer to as digital gold. What about actual gold?
Physical gold. Well, we got a gold flag we got to talk about. And what kind of flag? Well, that would be a technical analysis flag. So I'm going to pull up a chart here, GC equals F. There we go, up 73 basis points or 0.7% for the day. And here is a price action for the year. So you can see the heavy lifting was done by April and got a nice lift after Liberation Day, but it's just kind of steadied out. But one thing that's interesting is that these pullbacks have been kind of getting shallower and shallower, and we just have this bullish flag there. So when you have a long base like this, an extended base, this is what, a few months? When you get that final breakout, assuming it does happen, you might pull back a little bit, but then you have a lot of juice because of all this pent up energy. So I was looking at gold today and also gold miners. And here's our heat map of gold miners. You got the ETF over there, but Newmont miners, Freeport-McMoRan, and a bunch of others here. So you don't always see gold miners and gold go up in lockstep, but they happen to today.
All right, thank you, buddy.
You
Appreciate it. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.